I'm Michelle Smart. I'm an enrolled agent, and I'm here to give you the latest update on the Employee Retention Tax Credit. Please click like and subscribe so that other people who need to find this content can find my page. So I want to talk to you about what happens when you get this disallowance letter for third quarter of 2021. Now, these have been sent out just kind of as a blanket rejection. It's been challenged in the courts that the IRS did not have the right to send out a disallowance for something that they have not audited. So we can wait and see what happens in that court system. But as long as that's in the system, I would try to defend any ERC claims that I have out there. So let's take a look at that, what that disallowance letter looks like. So this is what people are receiving, and you can see that this is, it says, Dear taxpayer, we cannot allow your claim. It's for third quarter of 2021. What to do if you disagree? It's very important to follow through and send an appeal. And you can just follow the instructions here. I have a whole nother video on this topic. So what happens if we have to send this appeal and we go back and we have qualified third quarter due to a reduction in gross receipts? Now, one of the reasons the IRS sent out this disallowance letter is that most of the suspension laws had ended in second quarter of 2021. So they just assumed no one qualified in third quarter of 2021, which is not correct because we had two other ways to qualify. One is as a recovery startup business, and you would have checked box 31B on your 941X, or as a reduction in gross receipts. So let's say you got this letter and you're going to appeal, and you went back and you looked and you're like, oh my goodness, I did not have a 20% reduction in gross receipts comparing third quarter 2021 to third quarter 2019. What can I do? Well, we have a lot of different alternatives. And again, I would remind you, this is in the court, whether or not the IRS had the right to deny this claim. So I would definitely appeal anything on third quarter 2021, whether or not I think I qualify from what they're saying today, because this may change in the future. So what are the gross receipts? What I want to point out that most people do not realize is that generally the gross receipts are considered your total income. And this is generally service income, or if you're in the business of selling a product, it would be inventory sales. But what people don't realize who are not accountants is that it excludes net capital gains or losses. So let's say we are looking at our gross receipts and we've gone back and we looked at third quarter 2021 and we've compared it to third quarter 2019, and we have only an 18.5% reduction in gross receipts instead of the 20% that's required. Well, we have several alternatives. One is to look at alternative quarters, and thank you for the very alert person who made a comment on my previous video when I left out some really important information about choosing an alternative quarter. That would probably be the easiest, and I will be getting into that. But as far as the definition for gross receipts, for ERC, it's different for a nonprofit than it is for a regular for-profit business. And as I just pointed out, it does not usually include capital gains. What does that mean for you non-accounting people? This would exclude if you sold some kind of capital asset. So let's say, for example, you have a truck that you use in your business. You deliver something. Let's say you deliver food, you deliver pizza, and you have a truck that you own. Now, the business owns that truck, and when it is sold, let's say it was sold in third quarter of 2021, the gains or losses from that sale are not included in your gross receipts for the purposes of this gross receipts reduction for the ERC. So if you are not being really careful in your accounting and you had a deposit for the sale of that truck, you need to reclassify that. That should be under other income, and your regular profit and loss will show income at the top, expenses, and underneath that will be other income. Other income would be gain or loss on the sale of an asset. And that's where that income would go. So I would very carefully go through all of my receipts. You can go, if you're on QuickBooks, go into QuickBooks, click on your income, put in the dates for third quarter of 2021, if that's what you're looking at, and go through each deposit and see if there was anything in there that was not, in fact, part of gross receipts, if it was a sale of a capital asset. Now, if you're in the business of selling assets, if you're selling inventory, then that would be included in your gross receipts. But if you sold some asset that's used in your business, such as me, if I sold my computer and I had some gain on that, that is not included in your gross receipts for the purposes of the ERC. And just to make it more confusing, the IRS has said that for nonprofits, they must include all income from all sources for the gross receipts reduction test. Now, what's going to be the easiest thing to do if you've looked back and you see third quarter, I did not have that reduction? So let's go over what some of the alternatives are. You have an alternative quarter option. So one option would be if you were not in business in 2019 and you have to compare third quarter 2019 to third quarter 2021 and show a reduction of 20% in gross receipts, you don't have a quarter to compare. And therefore, the IRS has stated you may use the same quarter in the year 2020. So in that case, you would use third quarter 2020 compared to third quarter 2021 to see if there's a 20% reduction in gross receipts. I want to share with you, this was the bulletin 2021-20 that came out quite some time ago. This is the description of the decline in gross receipts, what the rules are. I can leave you a link to this, and this lays out some of the alternative quarters, what you can do. There are several different alternative quarters. I'm going to focus mostly on third quarter of 2021, but first quarter of 2021, you can use fourth quarter of 2020 as your comparison quarter. This describes if you were in business and so forth, if you were not in business in 2019 to have a comparison. So let's talk a little bit more about some of the alternative quarters. As I said, if you're finding you have a denial third quarter of 2021, go to the IRS website and look at this alternative quarter. So in 2020, I'm not really talking about 2020 now, you had to have a 50% reduction in gross receipts compared to 2019 in the same quarter. But in 2021, it went down, and the receipts for the quarter must be less than 80%, which is a 20% reduction in gross receipts for the same quarter in 2019. Now, this is absolutely definite. You have to hit that number. So let's focus on 2021. So there's a great example here where you can use an alternative quarter. You can use the previous quarter instead of using example third quarter 2019 to third quarter 2021. You don't have the 20% reduction. You can check and see if second quarter 2021 compared to second quarter 2019, if you had the 20% reduction in that quarter, you can use that to qualify for third quarter of 2021. And here is an example. For your gross receipts were $100 for each of the quarters in 2019. You had $75 of gross receipts in the first quarter of 2021. So we know that's a 25% reduction. That qualifies you. But you had $85 in the second quarter of 2021. Well, now you're going to panic and say, well, that's only a 15% reduction in my gross receipts, so I don't qualify. However, you can use the previous quarter. So if the first quarter 2021 compared to the first quarter 2019 qualifies you by reduction in gross receipts, you can use that quarter to qualify for the second quarter. So now on third quarter of 2021, let's say you looked and you didn't have the full reduction that you needed. If you had it in second quarter of 2021 compared to second quarter of 2019, you can use that to qualify for third quarter of 2021 as a gross receipts reduction. So it's really important to check those. And I will leave the link to this example so you can go through it yourself. That's going to be a very easy way to double check if you qualify, if you've panicked and realized, oh, I didn't qualify third quarter 2021. You may have qualified by using an alternative quarter. That's your easiest bet. Otherwise, dig through your gross receipts. Now, here's another example of how people have improperly coded something as sales income to a wrong quarter. Let's say your tax return is on accrual basis. If your accrual basis, that means it's the money that was earned in that period, not the money that you received in that period. So, for example, you had a business that you made sales on the last day of second quarter 2021, and let's say it was a $10,000 sale, but you didn't deposit it until July the 1st, 2021. That's putting it into third quarter 2021. If you're on the accrual basis, you can put that back into second quarter 2021. So there are adjustments that can be made. And I would work with an accountant or someone who understands accrual and cash, whether you are accrual or cash-based business, and see if you can qualify by playing around with some of the numbers here. I think people who don't really know accounting may be putting things in sales or in income that aren't really income. Let's say you got a reimbursement from, you had some insurance claim. That's not really income for the business in terms of gross receipts. Now, they may include that all income for a nonprofit, but I think generally speaking, that's an insurance payout for an asset or from the sales of capital assets. I would not put that in income for any in-profit business. I would remove that and put that into other income, gain or loss on sale. So let's say we've done this and still, no matter what happens, we find that we applied for ERC for a quarter that we cannot defend, that we had a 20% reduction in gross receipts in 2021. What would I do? I would still probably respond with an appeal saying that I qualified for the ERC. I would not give them any information that I can't back up. You can't be pleading with the IRS to make an exception for you. That just will not work. Whenever I make an argument or debate with the IRS, I quote their own documents. I quote, for example, the taxpayer bill of rights. I will quote and say, this is my bill of rights. This is what it says in your document. And this is what you did. You violated my rights as a taxpayer. So you can't just be saying, oh, please give me an exception to the rule. It just will not fly. They seem to be out for blood on this, and everything is in the court. So I would want to hold my place to qualify for the ERC. And that means I would just send something back saying I qualify for third quarter 2021. And even if I didn't send back any proof, this is sort of an anomaly. We don't know what's going to happen if the IRS really exceeded their rights and an APA violation, which I said is in the courts already. If they exceeded their privileges of defining how you qualify for a gross receipts reduction, and you have opted out and just not defended or appealed your disallowance, then you're out of the game. I'd want to stay in the game and just write back and say I qualify somehow. However you write it very intelligently. And don't say anything that's false, but I qualified for third quarter 2021. It's better if you have all the proof where you can say I qualified by gross receipts reduction, but do appeal it, and then we will see what comes out in the wash with all of these lawsuits. And just, I want to throw this out there. The IRS is under a lot of scrutiny for their handling of this ERC. And as you know, you've been waiting for ages. They've paid out billions of dollars in interest income on these ERC refunds that they have not sent out. So if any of you have appealed this disallowance of your refund and heard back, I would love to hear from you, because I'm waiting to see what the IRS response is to the appeals, if they're asking for additional information or not. If you have that, please share that with us so that we all are advised as to what's happening with the ERC. Please like and subscribe so that other people can find this channel. Thanks again. I'm Michelle Smart. I'm an enrolled agent.